For the overall market update, I'm going to start off with the dollar. It's been pretty good following the dollar to figure out what the market's going to do. It's been following it pretty closely. And so let's jump into it. We are on the overall fifth wave. And if you look at the daily chart, we are on the fourth wave. So then where are we at in the fourth wave, and what are we expecting like time frame wise for the dollar? So if you zoom in here, we finished the A wave down for the fourth wave. We have the B wave right here. It looks like could possibly be A, B, and then have one more move up here. But I think it's more likely that we have A, B. I think it retraced 38 to the 38 fib. Let's see. Yeah, around the 38 fib, which is totally fine for the B wave. And so if that's the case, it's looking like we finished a first wave and then a second wave here. And so then what are we looking at? We're looking at a third wave down here, and then a fourth wave and a fifth wave. And my target potentially could be 99.14, or maybe it just goes past the A wave. But anywhere from past 101.31 all the way to 99.14 is my target for the dollar. And so obviously when the dollar is getting weaker, the market should go higher, and I think that's what the case is. So let's pull up SPY now. And so on SPY, we have what looks like, on my last video, I thought that we could possibly stretch this out to August. Still possible, but it's probably a little bit more realistic that we have a 1, 2, 3, 4, and then 1, and 2 right here. And this is actually A, B, 1, 2, 3, 4, and then we have an extended fifth wave is very possible, especially for the time frame for the dollar too. Because if you look at this move right here, the dollar took about May 13th to May 30th, about 17 days to fall, and then it bounced, only took 2 days. And so if we're looking for about 17 days, maybe quicker from June 1st, that's literally right at the end of OPEX for the C wave. And it's already began, so if you take out the first and the second wave, then June 17th is where we're aiming for, and that actually goes right down here to pretty much my target. And so if we're looking at June 17th here, I think an extended fifth wave would probably be the most likely scenario. So we have 1, 2, and then maybe get a third wave, maybe only up to here, possibly all the way up to here. And we hit a minimum of 423, probably 423 to 430, I would say would probably be a pretty good target. And maybe not go above this fourth wave. Yeah, so maybe like 430-ish, something like that. Or if it extends even farther, we can hit the bottom of this, 435, the end of the first wave. Which, if you look at, I know my markings are all messed up. I've been looking at different options as far as the chart goes. And so actually this would be, yeah, this would be A, B, and then we'd have a C wave down here. And so the B wave can technically go all the way up to here if it wanted to, but I don't think it's going to go that high. It's probably going to go, if we're looking at fibs for the A wave to the B wave, let's see what that is. Let's go to the daily. we would have, let's see, 50% is at 421. 61 is another good option, 431. So probably 423 to 430 is the best price target by June 17th. That's my guess for this. And then we would start moving down here. I don't think that the one that I laid out in the last video, which is alternative, is as likely for August 2nd. Because unless the dollar just keeps on extending and going, taking a while to get down there. But we just know 423 to 430, dollar target is 101 to 99 target. And then if you look at the VIX, we have, these are probably the three main that you need to look at. The SPY chart, the dollar, and the VIX. You can look at the yields too, but the yields, sometimes it goes against, like bullish can be bearish and bearish can be bullish. So on the VIX, I still have this going all the way, let's see, June 17th. I have this going over 40 at least on the next move higher, maybe even 50. But so far, it's looking, we have A, and if you look at the 1.61 of A, we have right here at 48. So that's very possible that we hit 48. But it looks like we're just doing a B wave. So A, B, 1, 2, 3, 4, and then 1, 2, 3. We'll probably get a, I don't know if we'll get a, I don't know. We'll probably just head down here. The VIX is kind of hard to read the Elliott wave, but A, B, and then a C wave up here to 48 eventually. Time frame again, unknown, but most likely this is going to be falling till June 17th. Yields, I'll look at them like briefly. On the yields, we have, where are we even at? So it's at 2.95. I haven't even looked at them. So it's doing pretty much exactly what we laid out in the last video. It's simply this is an A wave, and it's kind of following the dollar. This is a B wave. I'm not even going to zoom in on it. But I think that we should get a move. We'll get a move back here to 2.73, possibly all the way down here to 2.42. So that's like pretty bullish for growth stocks if it falls lower. We'll see what happens, but it's going to come down here first before it starts to move higher. And the same with the dollar, falling, and then both are going to move higher, and then that's when we're going to see the correction in SPY, and we're going to see the VIX spike. So again, just putting the pieces together, following those 4 charts every single day, and knowing where you're at, that will help you trade your individual stocks and then trade the overall market. I use this in conjunction with my growth stocks too. So like, if the overall market is doing something, I always use that first, because the growth stocks are going to follow the overall market first. They're not going to follow their individual chart. Individual chart always comes second to the dollar, to SPY, NASDAQ, whatever, VIX, and the 10-year yield. Those are the 4 that you need to look at the most. So hopefully this content will help you out. Helps me out a lot, just looking at those and then pairing it in with my growth stocks and whatever else I hold. But I would make sure that you're holding some cash, because this move is probably coming. We're either going to get this and this, or we're going to get up here by June 17th, probably somewhere in that. And then we're going to move lower. And really think that there's a very good possibility that it goes to 350, maybe even like 340 or 330, something like that. And I mean, these people have been tricking retail for the past year and a half. And so you have to really chart to be able to be in the market right now. Like, if you're just guessing, then you're going to get burnt. So be ready for this move. The melt up is pretty much over, and get your cash ready. So I'll give you an update here next week sometime on the overall market. But we should be good for at least next week and probably the week after that.